I have been hearing a lot of people lately around me saying they want to start investing or learn more about it. So I thought it would be a good idea to do a short series on investing for beginners. But don't think that if you consider yourself a seasoned investor that you won't learn anything from this. Sometimes the best thing we can do is go back to the basics and refresh ourselves on items we have not visited in a long time, or maybe you jumped in so fast that you never heard of some of the basics that I will be covering on this video. So my hopes are that you will learn something from this that will make you a better investor. So for those of you wanting to start investing or wanting to expand your knowledge around investing and growing your wealth, this is the perfect video for you. And like I mentioned, it will be a series. I'm not sure how many videos will go towards this, so be sure to subscribe so that you can be notified when another video releases. That way you can continue forward on a path towards wealth and financial freedom. Now, there are a million things that prevent people from investing, from the fear of lack of knowledge, thinking it's too hard, or thinking you're too old to start. Well, I am here to tell you those are all false barriers we put on ourselves, and some that I have put on myself at one point. I have been investing for 4 years now and wish I would have started sooner in my early 20s, but guess what? After just a short 4 years of investing, I'm seeing healthy growth in my investments. I'm obtaining growing passive income from my dividends, and it is not hard. It really is not. It just takes the effort. So push that fear aside. You will learn. You are never too old to start. In fact, the best time to start is right now, because there will always be excuses that will just make that many more years go by where you are not growing your wealth. And I promise you that you will continuously look back and say, I wish I would have started sooner, or at that point in time when I was thinking of it. So don't let that be on repeat. Instead, prepare right now to start as soon as this video concludes. Technically, you are starting now because you are actively watching a video on investing. So kudos to you. I am proud of you. You are about to make one of the best decisions of your life that will ensure you create a better financial future for yourself and those around you. Being financially responsible is contagious. Believe me, once people know you are investing, saving, and being successful at it, you empower them to want to do the same. So let's start today by simply talking about the fundamentals of investing. I like to think of this as creating the foundation that we can build on. I'm going to start by sharing my best advice on what order you should be investing into the different accounts that are offered and available. I think this is the best way to ensure you are taking the best advantage of your dollars in their future. So the first thing you want to do is take advantage of any tax advantage accounts first. Taxes take a big cut out of your gains, so if you can avoid any of it in any way, do it. If you have a job that offers a 401k, that is where you should start. Many places offer a match, so always invest up to that company match. Then you want to open an IRA, an individual retirement account. You can choose either a Roth or a traditional account, and this goes for the 401k as well. So a Roth account, you pay taxes up front, and then any gains and income made is not taxed when you pull it out. This is the Roth option, and the one I prefer and think is the most beneficial for the majority of people. The traditional account, you do not pay taxes up front on the money invested, so the money is pulled from your pay before your job takes out the taxes. But when you go to withdraw in retirement, you will be taxed on that money. In a normal non-tax advantage account, you pay taxes twice essentially, on your money going into your account as you're using money that has already been taxed. Then you pay taxes again on the money coming out of your account when you decide to withdraw. This is why it is very important to prioritize tax advantage accounts first. Okay, so far we have invest into your 401k up to your company match, then open up an IRA account, and you will want to max this account out. Right now, I think you can invest up to $7,000 per year, so try to get up to that $7,000. Once you max out your IRA account, then go back to your 401k and get that maxed out. One exception, if your company offers a health savings account, which can only be used with a high deductible health plan, before you max out your 401k, you will want to max out your HSA. I think it's a little over $4,000 right now. This is a triple tax advantage account that lets you save money. Now that money rolls over every year so you don't lose it, which is different from a flexible spending account where you have to use the money by the end of the year or lose it, but not the health savings account. You can use this money for health-related expenses, or you can use it as a retirement tool, and if you reach a certain age, you can pull the funds out from there and use it however you wish. So your money goes in tax-free, investment earnings grow tax-free. So yes, you can invest the money that goes into your HSA, that's an option, and the money that gets pulled out is tax-free if you withdraw according to the guidelines, of course. So not to mention, if you have a large health expense and need to dip into this health savings account, the money is already there and you can utilize it for those purposes if needed. But if you can avoid touching this account, it will be a third retirement tax advantage account. So again, prioritize these tax advantage accounts first. 401k up to match, then max out an IRA, then max out an HSA if you have access to one, then go back and max out your 401k. I see way too many people go straight to a non-tax advantage individual account as they are eager to buy and sell investments as they wish, but they are making a big mistake by not utilizing the tax advantage accounts first. So this is the beginning of creating your foundation. If you get all maxed out with these tax advantage accounts, then yes, open up a non-retirement individual investing account with a broker like Fidelity, Schwab, or Robinhood, where you can buy and sell your own stocks daily on the stock exchange. Just don't make the mistake and do it in reverse. Some people think investing is straight buying stocks like Apple, Tesla, and Nvidia, but it's way more than that, and there is a beneficial, responsible way to do this. Okay, now that we got the order of investing in place, the next thing to continue building our foundation is focusing on your savings. We need money to invest, so the best way is to make sure we have money set aside in a beneficial way for the rainy day fund or that vacation fund. And the worst thing we can do is get in a situation where we have to stop investing because we do not have the funds to cover a big expense. I recommend utilizing your paycheck in this way. It's called the 50-30-20 rule, except I'm going to change it up a bit. So 50% of your pay should go towards needs. So that's expenses like groceries, utilities, mortgage, your essential expenses. Experts recommend the 30% goes to wants, but I think it should go towards savings. So I'm flipping the two. So 30% towards savings, retirement savings, emergency rainy day funds, and investing. Then 20% should go towards wants. We still have to live our lives. So dining out, entertainment, hobbies, that vacation fund, these are the non-essential expenses. So structure your life to where this is possible. This is a good time to do a budget analysis. So comparing your income versus your expenses and see where you can cut out or reduce some of your expenses. Setting yourself up to deploy your income in this way will help propel you faster towards wealth and financial freedom. Next is a piece of advice that will help keep your foundation from cracking, and that is be patient. It's simple advice, but one of the hardest things to do. The majority of bad financial decisions I've seen occur are from people becoming impatient and making an impulse move that loses them money or prevents them from making money. I see people do this with fitness and finances. They want results and they want them now. Well, it does not work that way. You have to put in the effort. If you're impatient, you're likely to be easily persuaded to take a shortcut, but all that does is cut you short on reaching your goals. I see so many investors hear others say, put your money here, it will 10x your money, or invest in this new company and you will become a millionaire in 5 years, or hey, this stock is dirt cheap and if you put all your money in it, you will be sure to come out on top. Well, guess what? Things are usually cheap for a reason. Catchphrases like 10x your money are usually only for the benefit of the person pumping up that stock. Just trust me. Don't gamble your hard-earned money to try and make a quick buck. Know that quality stocks, ETFs, and investments along with time are the proven methods of making money in the stock market. Slow and steady wins the race in this situation. And sure, you will hear about the very few that do make it rich by gambling, but the odds are so heavily against you, it's just not worth it. So have patience and know that year after year of investing, you will see your money grow faster and faster with time because the snowball effect happens. And that's when you get any dividends paid to you from your investments, you reinvest those, then that gets you more dividends, you reinvest those dividends, then you get bigger dividends from those dividends you reinvested, and it repeats and just grows faster and faster. Trust me, it really is beneficial. I've seen way too many people lose money not being patient. So learn to drown out the noise you hear, the fear social media tries to push, and just learn to stick to what you know and you will do great. So what I want to kind of wrap this video up with is we talked about the foundation, but the next steps are building the structure, a strong, sturdy structure. So what I created for me when I invest and look for companies to invest in is this quality checklist. And I believe that's what most of you are here for, is to invest, to buy and hold stocks. Long-term holding is the key as well. So this quality checklist has really worked well for me. I'm going to show you my portfolio here in a minute, but these have ensured me the massive gains I've made. And I believe you can, feel free to take this and maybe change it. You want to create your own checklist, of course, because everyone has a different investing purpose and goal. But for me, this is it. So a few of the videos will be on, well, all of the videos are going to be on this, but what I'm saying is there might be one video on one of these, and then I might be able to group these in another video. So one is solid financials. That will be its own video. You want a company that has good financials. We're going to talk all about that. Then you want a good management team. When you invest in a company, you want to make sure it is being run in a very brilliant way. And there are some brilliant CEOs and leaders out there that just create companies that grow and grow, and therefore your investment grows and grows. So that's another thing that I utilize to buy my stocks, is making sure they have a good management team. Then you want to look at a positive brand recognition, staying power. You see companies right now that I believe their brand is dwindling. You look at Disney, that if something negative happens and people start saying, you know what, I don't have confidence in this company because of their brand is starting to crack, and I'm just gonna go to this other brand that is actually very solid, then that's what I'm looking for, right? Because that does matter. Then I look at products and services. I can't tell you how many times people invest in a company and don't even know what they do. Again, that's when you just go off of what someone else says. Don't do that. Do your own research. So learn about the products, the services that this company does. See if they offer good recurring revenue through subscriptions, or if they have a big ecosystem. We'll talk more about this. And then I look at to see if a company has a large moat. So a moat is essentially that competitive advantage. Do they have something that cannot be replicated, or shall I say is not easily replicated? Do they have a monopoly on the area? This is so important, and I believe is a big part of the success of my companies. Then you want to get a good valuation, right? You want to buy stock at a price that isn't overvalued. Now, there are some caveats to this that I will talk about. So here it is, the checklist. This is the structure. We talked about the foundation today. This is the structure of investing. It not only goes for individual investing, but for those accounts like the 401k, the IRA, you're going to have to choose investments to put in those as well. This is something you can go off of. Of course, you can utilize ETFs, that's exchange traded funds, which is a basket of stocks under one fund. That is the best way for 90%, I feel, of investors to start out with, and then you can start getting into some individual stocks. But we'll probably talk more about that. So, as promised, on this channel, I am transparent, I'm honest. I think that's the best way to help others. And so here it is, my portfolio's performance. I am up 19.5%. That is excellent, because last year, if you're new to my channel, I ended 2022 at a negative 6% loss. I ended this year over 20%. So beginning of this year, we've seen a little bit of dip, but what great gains. And I contribute that to the companies I hold. Microsoft, a high quality company, meets essentially every checklist item on that quality checklist, except for valuation right now. I think it's overvalued. But you look at other companies like Amazon, S&P Global, Union Pacific, Vici, Realty Income. I can go on and on. Now, I do have a few losers here, and hint, hint, they're in the red. So I'm going to use this portfolio as an example of what to do and what not to do, what has helped me and not helped me. And so yes, if you have any questions on my portfolio, let me know, but you'll be seeing a lot more of this, especially if you subscribe to my channel. So remember, the best time to start is now. So start with prioritizing your tax advantage accounts, focus on the 50-30-20 rule, be patient, and I know most of you are probably tuning in to learn more about the investing side of things, like I said. So that's why the next couple of videos in this series will be covering my quality checklist we just saw, which will focus more on you being the one investing and buying and selling stocks, etc. All this will help you create a path towards creating wealth, and that's an amazing feeling. So thank you so much for joining me today. Get started now on these items that will create a future of wealth for you that you deserve, and we'll see you very soon.